You know, people always ask me how a man makes millions in the market. They think there's some magic trick, some hidden formula that only a chosen few know. But let me tell you straight, there are no miracles in trading. There's only observation, patience, and the courage to act when the market shows you the truth. Have you ever noticed how most folks will listen to every opinion on the street, yet ignore what the tape itself is saying? That's the first mistake. The market is always talking, if you know how to listen. I didn't start with millions. I started with a notebook, a sharp pencil, and a willingness to watch every tick of the tape until it made sense to me. What do you think I learned? That the tape doesn't lie. Men lie, newspapers lie, rumors lie. But the market tells the plain truth of supply and demand, of fear and greed, of who is strong and who is weak. And if you learn to read it, you'll know where the money's flowing before the crowd even realizes it. Most traders want action. They want to be in the market every day, buying here, selling there, taking 10 little profits and counting themselves smart. But I learned early, it isn't the trading in and out that makes a fortune. It's the big swing, the big move, the one trend that carries you when you have the courage to ride it and not jump off at the first bump. How many times have you sold too soon, only to watch the stock march higher without you? That pain is the tuition every trader pays. The lesson: sit tight when you're right. Now, don't misunderstand me. I don't mean sitting tight on hope. Hope is the death of a trader. You sit tight on judgment, on the recognition that your position is in harmony with the main trend of the market. If you're wrong, you must cut your loss without hesitation. A small loss never hurt a man. But a big one, well, that's the rope around your neck. Have you ever held onto a stock because you thought, it'll come back? And what happened? It kept sinking until your capital was gone. That's not trading. That's gambling, and the market has no mercy for gamblers. I used to haunt the bucket shops in my youth, laying down small bets on price moves. It wasn't the money that mattered back then, it was the game, the thrill of seeing if my read was right. Every rise and fall taught me something. I discovered patterns that repeated, day after day, no matter the stock. Isn't it curious how human nature never changes? 100 years ago, traders panicked and chased just the same as today. Fear and greed don't evolve. They only disguise themselves in new tickers. You see, trading is not about predicting tomorrow's news. It's about recognizing today's trend. The market discounts everything. If steel is going up, it's not because of what you'll read in the papers tomorrow. It's because the insiders, the men who know the business, are already buying. Their footprints show in the tape long before the headlines. Have you ever wondered why a stock rises before good news breaks? That's the market whispering the truth to those who know how to listen. There's another secret, and it's one few ever master: self-control. The greatest danger in trading is not the market, it's you. Your own impatience, your own vanity, your own refusal to admit you're wrong. I can give a man every rule I ever used, every observation I ever made, and still he'll lose because he won't follow them. Why? Because discipline feels harder than gambling. Do you recognize that in yourself? That hunger to act when the right move is to wait. Let me tell you something that will save you more than money. It will save you years of wasted effort. The big money is not in the buying and selling, it's in the waiting. Anybody can buy, anybody can sell. But to buy right and sit tight, that is the test of a real operator. When you've placed your money in line with the tide of the market, and you have the strength to hold it until the tide has run its course, that's where the millions are made, not in jumping in and out, but in staying put when it counts. Think of the market like a great ocean. The waves come and go, splashing the little traders about, drowning those who swim too close to the rocks. But the tide that's steady, powerful tide, if you catch that, you're carried to distant shores. Now ask yourself, are you chasing the waves, or are you waiting for the tide? That one question will tell you if you're on the road to success or ruin. I've seen men with more information than me lose everything because they couldn't master themselves. I've seen others with no inside tips, no special access, become wealthy because they trained their eyes to read the chart and their hearts to stay calm when the crowd was screaming. Which would you rather be, the man chasing whispers, or the man who sees the truth on the tape? The truth is, a trader must be a student for life. The market never graduates you. Every cycle, every panic, every boom teaches again the same lessons. Yet how many traders forget them the moment greed blinds their eyes? Do you know what separates the veteran from the novice? Not the number of years, but the scars carried from mistakes survived and lessons learned. If you've lost money, don't waste the lesson. Ask yourself, why did you lose? Was it because the market was wrong, or because you were? Now, let's speak plain about money. To build wealth in trading, you must treat your capital like your army. Each dollar is a soldier. Would you send your army into battle carelessly, without strategy, without knowing the terrain? Of course not. Yet traders do it every day, tossing their dollars into hopeless fights. Preserve your soldiers. Send them only when the chance of victory is on your side. And if the battle turns against you, retreat quickly. Better to lose a handful of men and fight another day than to see your army slaughtered because of pride. What's the greatest enemy of the trader? Overtrading. The urge to always be in the market. I've seen it ruin men with the best of minds. They can't bear to be idle. But the market doesn't reward activity, it rewards correctness. Would you rather make 10 trades with small profits, or one trade that doubles your stake? The answer seems obvious, yet few have the patience to wait for the one trade that matters. Consider this: when a stock breaks out of a long range, that's not an accident. That's accumulation or distribution that has been going on for weeks, maybe months. The insiders have been preparing. When the move begins, it can carry far, much farther than the average trader believes possible. And what do most do? They sell too soon, because they fear losing the small profit they've made. Have you ever cut short a winner, only to watch it climb for weeks without you? That's the curse of small thinking. Train yourself to think in trends, not ticks. And let me remind you, never average down. That road leads straight to ruin. When you're wrong, admit it, cut it, and move on. Adding to a losing position is nothing more than refusing to admit your mistake. Would you add more water to a sinking ship? Then why add more money to a sinking stock? Save your capital for when you're right, not when you're wrong. The market is a stern teacher. It punishes arrogance and rewards humility. When you think you've mastered it, that's when it humbles you. But if you approach it with respect, with patience, with the readiness to learn every day, it will pay you handsomely. Ask yourself, are you trading to satisfy your ego or to build lasting wealth? The answer will decide your fate. I'll tell you something most won't admit. The millions I made weren't from constant action. They came from a few great moves, made at the right time, held with conviction, and protected with discipline. All the small trades in between were distractions, practice at best, losses at worst. The real fortune lay in catching the great bull markets and the great bear markets, not the little ripples in between. Do you have the patience to wait for those great opportunities? Or are you still chasing the daily noise? A trader must learn to think independently. The crowd will always try to sway you. Newspapers, tips, opinions, all of them are distractions. The market itself is the only authority. When I was young, I thought I needed advice. But the more I listened, the more I lost. Only when I trusted the tape and my own judgment of it did I begin to win. How about you? Are you still letting others tell you what to think? Or have you learned to see with your own eyes? There's another truth I'll give you, one that's cost men their fortunes because they wouldn't believe it. Markets are never wrong, opinions are. When the market moves against you, it's not the market's mistake, it's yours. Don't argue with it. Don't reason with it. Don't fight it. Accept it, adjust, and align yourself with it. Would you try to stop the tide with your hands? Then why resist a market trend with your pride? And don't forget, the hardest work in trading is not analysis. It's sitting alone with your decisions. The loneliness of trading breaks many men. They want the comfort of agreement, the reassurance of the crowd. But the market rewards independence, not conformity. Can you stand alone when your judgment tells you one thing and the crowd screams another? That's the test of a true trader. You may think trading is about charts and numbers, but at its core it's about character. Patience, discipline, courage, humility. These are the tools more valuable than any technical system. Have you noticed how two men can use the same method, yet one becomes rich and the other poor? It isn't the method, it's the man. The big money is made in the big swing, not in frequent trades. That's a truth I learned not from books or lectures, but from the harsh lessons of the market itself. Most traders think success comes from being busy, always buying and selling, in and out of positions, showing activity as if activity itself proves intelligence. But the market doesn't pay you for activity, it pays you for being right. And more than that, it pays you for being right and staying with it long enough to let the real profits accumulate. Have you ever noticed how quickly a small gain vanishes when you cut it short, while the rare occasions you held on gave you the kind of profit that could cover 10 small losses? That is the essence of the big swing. When I was young, I wanted action. I wanted to feel alive in the market every day. So I would take quick trades, scalp for eighths and quarters, and call it profit. But I soon realized that these little profits were nothing compared to what I gave back when one bad trade ran against me. My small wins were like pebbles, but my losses were like boulders. That's when it struck me the way to real wealth was not in those pebbles, but in waiting for the boulders to move and riding along with them. Have you ever found yourself exhausted from too many trades, only to look back and realize you would have been richer doing less? The crowd hates waiting. That's why most men fail. They can't bear to hold a position through the dull times when nothing seems to be happening, or through the first shakeouts when the market tests your nerve. They want quick satisfaction. But the big swing doesn't pay the impatient. It pays the one who can recognize when a genuine trend has begun and then hold on, sometimes for weeks, sometimes for months, while the crowd jumps in and out, growing tired and discouraged. The market rewards the man who sits still while others lose their nerve. Think about the great bull markets. When a stock breaks out of a base, that's not the time to take 10 little scalps and move on. That's the moment to recognize that something larger is at work. The insiders, the men who know the business best, have been quietly accumulating, and now the tide is ready to roll. If you catch that tide and hold your position, the market will do the heavy lifting for you. But only if you let it. Would you rather grab a handful of loose change or wait for the vault door to open? That's the difference between the small trader and the one who makes millions. Of course, there's a trap here, and it catches most men. They believe in the big swing, but they don't know the difference between a real trend and a false start. They hold when they should cut, hoping that a losing position will turn into a winner. That's not sitting tight on judgment, that's sitting tight on hope. And hope is a disease in the market. The secret is to distinguish between being wrong and being early. If you're wrong, you must get out. If you're early, you must endure the waiting. Can you tell the difference? That's where study, experience, and discipline come in. I'll tell you what makes the big swings so profitable: compounding movement. A stock that moves a few points might tempt you to take your profit quickly, but what if it's beginning a run of 30, 40, or 50 points? That's the kind of move that can multiply your account, not just fatten it. Yet most traders never see such profits because they jump ship too soon. Why do they do it? Because the little profit looks real, and they fear losing it. Fear robs them of fortune. Have you ever sold a stock with a small gain, only to watch it double in price afterward? That pain is the tuition you pay for not trusting the big swing. Now, don't mistake this for laziness. Waiting for the big swing is not doing nothing. It's studying, observing, preparing. It's keeping your capital safe and your powder dry until the right opportunity appears. Then, when the moment comes, you strike with size and conviction, because you know the odds are in your favor. Most traders scatter their capital in small trades, leaving them weak when the true chance arrives. But the operator who understands the big swing preserves his strength so he can ride the move that matters. Would you rather be busy or be rich? Another lesson about the big swing is psychological. It's not easy to hold a winning position as it grows. The temptation to take your profit nags at you every day. The market shakes you out with reactions and pullbacks. Friends tell you to be careful. The newspapers warn of doom. Everything conspires to make you doubt. Yet if your judgment is right, if the market confirms your position, the greatest test of all is to do nothing to resist the urge to take the small profit and instead sit for the large one. That's why so few men ever make millions. They lack the strength to do nothing when nothing is the hardest thing of all. And let's be honest, the big swing is where real wealth is built, because it aligns you with the natural rhythm of the market. Markets trend because human emotions drive them too far in both directions, up in euphoria, down in despair. Your job is not to catch every tick, but to catch the wave of emotion and ride it until it exhausts itself. That's when fortunes are made. The scalper can make a living, perhaps, but the speculator who holds for the big move is the one who builds lasting wealth. Which path are you on? I remember holding positions in great bull markets where the stock climbed day after day, week after week, while the crowd sold too soon. I watched them congratulate themselves on their small gains, only to kick themselves later when the real move became obvious. My millions didn't come from cleverness in guessing each day's action. They came from sitting still when I was right, letting the market pour profits into my lap because I had the courage to hold on. That's the hardest lesson, but also the most rewarding. You see, the big swing doesn't just build wealth, it builds character. It teaches patience, courage, and the mastery of your own impulses. Every day you hold a winning position against the nagging voice of fear. You grow stronger. Every time you refuse to snatch at a small gain because you trust the larger trend, you train yourself to think like a true trader. And over time, this habit separates you from the crowd. The crowd lives on crumbs. The operator lives on banquets. Do you want crumbs, or do you want a feast? The market is full of noise ticks, headlines, opinions. All of it distracts you from the truth that wealth is built in silence, in patience, in the calm of sitting with a position that is moving your way. The market pays those who can ignore the chatter and keep their eyes on the main current. When you align with that current, you don't need to be clever every day. You'd only need to be right on the big move, and then stay right by staying put. That's the essence of it. The big money is in the big swing, not the small trade. It requires patience, judgment, courage, and self-control. But once you understand it, once you've lived through it, you'll see that all the small trades you used to make were distractions, little fires keeping you busy, while the real blaze roared in the distance. The operator doesn't chase sparks. He waits for the inferno, and when it comes, he rides it until there's nothing left to burn. Discipline and self-control matter more than tips or news. That's a truth I learned not once, but 100 times, because every time I thought I could sidestep it, the market punished me. A trader can know all the patterns, all the signals, all the theories in the world, but if he can't control himself, if he can't stick to his own rules, he will end up broke. Have you ever noticed how easy it is to write down rules, yet how hard it is to follow them when the market starts tugging at your emotions? That's the battlefield of trading, not the chart, not the ticker, but the space between your ears. When I was young, I used to think tips were a shortcut. A whisper from the right man, a hint from someone in the know-it-all seemed like a path to fast profits. And sometimes they worked, which was the worst part, because that gave me the illusion that I had found an edge. But every time I leaned on tips, I found myself holding positions without conviction. Positions I didn't understand, positions I couldn't defend. When they went against me, I froze, because I had no reasoning of my own to rely on. Do you know that feeling? When you buy because someone told you to, and then the market moves the wrong way, and suddenly you're lost. That's the danger of tips. News isn't much better. By the time you read it, the market already knew it. Prices move before headlines appear. The insiders act, the tape records it, and then the papers write about it after the fact. If you trade on news, you're already late to the party. And besides, news excites emotions. It makes you want to buy in a frenzy when it's good and sell in panic when it's bad. But discipline means ignoring the noise and listening only to what the market is telling you. Can you resist the urge to act when the whole world is reacting? That's where discipline separates the trader from the crowd. Self-control begins with admitting you are not bigger than the market. The market is always right. If it moves against you, that's not unfair, that's not a mistake, it's reality. You can't argue with it, you can only adjust. A man without self-control digs in when he should cut loose, adds to a loser when he should admit defeat, and dreams of a turnaround instead of facing the facts. How many times have you watched a small loss grow into a disaster because you refuse to take it quickly? That's not the market robbing you. That's you betraying yourself. Discipline is not glamorous. It's not exciting. It's not the kind of thing people boast about. Nobody brags about cutting a loss quickly or sitting in cash while waiting for the right setup. But those are the acts that build fortunes quietly, while the gamblers brag about their lucky wins and then disappear when their luck turns. The disciplined trader survives, grows, and thrives because he respects his own rules more than his impulses. Would you trust a man who ignores the rules of the road when driving your carriage? Then why trust yourself with money if you ignore your own trading rules? One of the hardest disciplines is patience. The market offers opportunities, but not every day, not every week. There are stretches of time when the wise trader does nothing, when the best trade is to sit on your hands. Yet most can't bear it. They crave the action, the thrill of a bet. That craving is what destroys them. Discipline means waiting not for movement, but for the right movement, the one that aligns with your method, your rules, your judgment. Can you sit idle while the crowd rushes about? That's the measure of patience. Another form of self-control is knowing your own size. Too many traders bet too much on one idea, putting themselves in a position where one mistake can wipe them out. Discipline means sizing properly, risking only what you can afford to lose on a trade, and keeping enough in reserve to fight another day. It's like an army general. Would he send his entire army into the first battle, leaving nothing in reserve? Of course not. But traders do it all the time, and then they wonder why one bad move destroys them. Self-control means resisting the temptation. Emotions are the real enemy. Greed whispers, hold longer, double down, take more. Fear screams, get out now, don't wait, don't trust your plan. Both are liars, but they speak in voices louder than reason. The only way to silence them is with discipline, with rules you obey no matter how you feel. Have you ever watched your hands shake as you placed an order, knowing it wasn't part of your plan, but you couldn't resist? That's emotion steering your ship into the rocks. Self-control is the hand that holds the wheel steady against the storm. I've seen men ruin themselves not because they lacked intelligence, but because they lacked discipline. Brilliant men, quick thinkers, full of knowledge, but they couldn't master their impulses. They chased tips, they bet too big, they let losses run, they ignored their own rules. And the market doesn't care how smart you are if you can't control yourself. On the other hand, I've seen ordinary men, with no special brilliance, become wealthy because they stuck to their discipline day after day. Which kind of trader do you think survives the genius without control, or the steady hand with rules? Self-control also means accepting boredom. The market is not always exciting. Sometimes it moves in narrow ranges, sometimes it drifts without direction. The disciplined trader accepts that and waits. The undisciplined one forces trades out of boredom, and boredom trades are almost always losers. Can you stand the boredom, or do you need the thrill? That answer may determine your future in trading. There's also discipline in success. Strange as it sounds, making money can be more dangerous than losing it, because success tempts arrogance. After a few good trades, a man thinks he can't be wrong. He throws discipline aside, bets bigger, breaks his rules, and the market humbles him. Self-control means remembering that every day is new, every trade is independent, and yesterday's success does not guarantee today's. Do you stay humble when the market has rewarded you, or do you start to believe you've mastered it? That's the test. The disciplined trader treats trading like a business. He doesn't gamble for excitement. He doesn't act on whims. He doesn't let emotions guide him. He has a plan, he executes it, and he protects his capital above all. He knows that without capital, there is no trading, and without discipline, there is no capital. It's as simple as that. The undisciplined trader may enjoy the highs and lows like a gambler at the racetrack, but in the end, he is left empty-handed. When I say discipline and self-control matter more than tips or news, I mean that they are the foundation. Without them, everything else crumbles. With them, even a simple method can succeed. The market is full of distractions, temptations, and traps. Discipline is the shield that protects you from them. Self-control is the sword that keeps you steady in the fight. Without those, you're unarmed in a battle that spares no one. And the truth is, most traders lose, not because they lack knowledge, but because they lack the strength to obey what they already know. Independence of judgment separates winners from the crowd. That's not just a fine phrase to put on a page, it's the lifeblood of a trader who lasts. The crowd will always be there, shouting, urging, whispering, luring you into its arms with the comfort of numbers. But the market does not pay you for being comfortable. It pays you for being right. And to be right, more often than not, means standing apart from the mob. Have you ever noticed how the loudest voices usually come just when a move is about to end? That's the trap of the herd, and it devours those who cannot think for themselves. When I was young, I thought it was safer to listen to others. After all, they seemed to know more. They spoke with confidence. They used figures and facts. They told stories that made sense. So I followed them. And I lost. It wasn't until I learned to trust my own judgment, drawn from the tape, the chart, and my own observations, that I began to make money. What's the use of another man's opinion if it isn't backed by your own conviction? When the market turns against you, will that man cover your loss? No, he'll be too busy covering his own. The crowd operates on emotion. They buy when they feel good, they sell when they feel fear. That means the crowd is usually wrong at the turning points, the exact places where a trader must act with clarity. To follow them is to buy at the top and sell at the bottom. Yet that is what most do, because independence is lonely, and loneliness is hard to bear. Have you ever felt the pull of wanting to be right with everyone else, even when your gut told you the opposite? That's the test, and most fail it. True independence does not mean stubbornness. It doesn't mean ignoring the market and clinging to your own view against the facts. That's just vanity disguised as independence. What it means is weighing the evidence yourself, forming your own judgment, and having the courage to act on it regardless of whether anyone agrees. The tape is your guide, not the gossip, not the newspaper, not the chatter of brokers. If your judgment is right, the market will reward you in due time, though the crowd mocks you in the meantime. Can you endure their laughter while you wait for the proof? That's the measure of independence. Think of the great moves in market history. When a stock begins its rise, the crowd is skeptical. They laugh at the first buyers. They call it overvalued. They find reasons why it cannot go higher. Only a few have the courage to step in, to trust the signs that accumulation is underway. Those few ride the stock for great profits, while the crowd finally joins in too late at the top. The same in reverse during a decline. The crowd clings to hope, repeats comforting phrases, while the independent trader sees the distribution and steps aside or even goes short. Independence earns profits while dependence earns losses. Which side would you rather be on? The hardest part of independent judgment is the silence it requires. You must stand alone with your decisions, without applause, without encouragement, often with nothing but doubt for company. But that silence is where clarity is born. If you need the crowd to reassure you, you're already lost. The market punishes dependence because dependence blinds you to reality. The tape doesn't care about your comfort. It only tells the truth. Do you have the strength to listen to it instead of to your friends, your broker, your neighbor at the club? I've seen traders destroyed by their need for agreement. They would not act until someone else confirmed their idea. By the time they had their confirmation, the move was already half over. Then they bought just as the insiders were selling. That is the curse of dependence. You're always late, always reacting, never leading. Independence may feel risky in the moment, But in truth it is the only safety, because it aligns you with facts, not opinions. The crowd is noisy, and it never stops. Every day brings new tips, new predictions, new reasons to doubt your own mind. That noise is a constant test of discipline. Can you tune it out? Can you remind yourself that markets are moved by forces deeper than gossip? If you can, you'll begin to see patterns that others miss, because you're not blinded by the chatter. If you can't, you'll spend your life chasing shadows while others quietly collect the real profits. Another danger of the crowd is the illusion of intelligence. A man feels smarter when he agrees with others. He feels safe, as though being wrong with everyone else is less painful than being wrong alone. But the market doesn't soften the blow just because you shared it with others. A loss is a loss, no matter how many people suffered it with you. Independence demands you accept responsibility for your trades. If you're wrong, it's on you. But if you're right, the profits are yours too, unshared, unborrowed, fully earned.